GM, everyone. We're just getting our speakers lined up, waiting for my co-host Sasha. So just in the meantime, my name is Max. You can call me Max or Mugen. Either's fine. And yeah, we'll just get everyone lined up and then we'll jump in. Hey there, Sasha. How you doing today?
Yeah, GMG, I'm all good. How are you?
Doing well, doing well. Do you want to introduce us to our speakers, or we can go around the room and have them introduce themselves?
Yeah, I think we're waiting for Wendy. She'll be late, and we're also waiting for CryptoBurb, who's going to be late, but we already have 3 speakers. So, hello, Andy. How are you doing today?
Hey, hi. I'm good. I'm really good. I just got back from dinner, so just the right time.
Amazing. Hello, Rock. How are you? Hello.
Rock, are you there? Maybe some technical difficulties on your end, Rock. We can't hear you.
Oh, we have Wendy. Hello, Wendy. Yeah, in the meantime, Crypto Insight, how are you today? Can you introduce yourself?
Hello. Just a mic check first. Can you hear me all right?
Yeah, loud and clear.
Yeah, hello. I'm Crypto Insight UK. I've been in crypto for 7 years or so, 8 years maybe. Like most people, round trip my first cycle. I'm making content full time since 2020, 2021. Started on TikTok, moved more towards Twitter during the bear market, and now I spend most of my time just researching, chatting about crypto in general, trying to make connections in the space, chat to people, and give people the insight that I get from spending all my time in the space and just try and condense down more complicated areas of both macro and crypto for anyone who wants to basically look at my content.
Amazing. Yeah, sorry, it was thumbs up, not thumbs down. Hello, Wendy. How are you doing today?
Good morning. Happy to be here. Unfortunately, I'll only be able to stay for a little bit because I got the times messed up. I've got a busy morning with the little one, but thank you guys for having me. Am I introducing myself?
Yeah, go ahead.
Shout out to Andy. Hope you're doing well. Part of the Squid Grow family. I'm Wendy O. I've gotten crypto since end of 2017. Started making content in 2018, and I think I'm at a 925,000 globally on all platforms. And I just like to talk about the basics of crypto and have fun and say fun things and try to get more of the underdogs involved because that's what it's about at the end of the day.
Amazing. So you're onboarding more people. Yeah. So let me know how much time you have, and we'll ask you first, and we'll let you go.
Yeah, probably. I'm waking a little low up right now. She's not interested in waking up this morning for school, but I probably can be here maybe about 7:15, 7:30, and I apologize. I got the times messed up.
Yeah, amazing. Hello, Rock. Can you hear us?
Testing. Can you guys hear me now?
Yes. Hello.
Great. Good to see everyone here. Hey, Wendy. Good to see you. I'm Rock Zacharias, co-founder of QuickSwap and CEO of Lunar Digital Assets. Lunar Digital Assets is an incubation and marketing firm that is responsible for some projects you guys may know and love, like Polygon and QuickSwap, Dogechain, ZKBTC, and several others.
Beautiful. So I think we have everyone. Yeah, I think maybe Chris, can you also introduce yourself because you didn't say anything about yourself yet?
Hi, can you hear me okay?
Yes, hello.
Yeah, hi everyone. Yes, so actually my story is pretty similar to Crypto Insights, although he's been in the space longer by the sounds of it. I first entered in about mid-2020. I went full degen, full-time, quit my job mid-2021. And, you know, I'm a fundamental researcher. And through the troubles I had to try and understand blockchain technology, I decided to apply my skill sets in the space and shorten everyone else's learning curve so that they didn't struggle like I did to pick up on you know this amazing technology and everything around it.
Beautiful. So yeah, I think we can kick off. Can I ask everyone in the audience to RT the space and like it and comment? It will help us get more listeners, and I hope that it's going to be insightful. So, well, basically, we're here to just talk about what's going on the market right now. And my first question is it so over?
It's scary.
Yeah, so well, basically, Bitcoin is just like 10% down from its all-time high, but I feel like the sentiment is pretty bearish, and I don't really see why. Can anyone just help me understand like what's going on and why the dip is happening?
Well, a lot of people get what ends up happening is we had like this cycle is a lot different from the last one, and all the cycles they're kind of similar but different. They have at least unique traits, in my personal opinion. I mean, if you look at it, we've been ranging between like $74,000 and $60,000, and again, I know that's a very large range, but at the same time, if you really zoom out and you kind of really look at the chart, it's not bad at all, like any way, shape, or form. And then I feel like a lot of people forgot that we had that really nasty dip from what was it, like 69,000 to, I don't have the chart in front of me, to what, 40,000, something along those lines. And again, these numbers are off. I don't have the chart in front of me. But then we ended up bouncing back and breaking all-time high again. So I'm not bearish at all. I don't understand what the bearish sentiment is. I mean, it's a little bit boring because we're not seeing a lot of the blue chips. We're not seeing a lot of the major alts pop off. But at the same time, there's still a lot of opportunities to be made in more risky, volatile assets. And there's a lot of people that are able to do well in those if you have self-control. And I feel like one of the biggest problems in the space is we see things on the internet. We're like, oh my God, I can put $1,000 in and make $100,000 or $1 million. And that's just a very small amount of people. It's a very small subset, which is great. I'm super happy for them, but that's not the reality. So I feel like what ends up happening is it's kind of like what's that effect called where you see something negative and you pick it up and you keep running with it? We see all this drama that's happening in the space and we just kind of get negative and down and out about it instead of realizing what an amazing opportunity it is. And just like a bear market, with the bull market, you still have to protect your capital. Like what was there was like 400 million worth of liquidations the other day, which is ridiculous. And we shouldn't have those. We should, especially the people that have been in the space since last cycle, which we really haven't seen more retail come in yet. They're coming slowly, but it's not like the peak of last cycle or even the beginning of last cycle. But I feel like most of us know a little bit better to practice a bit more risk management and to protect our capital. So me, I'm not bearish at all. I'm just very excited and grateful to have this opportunity in the market. But again, people just need to calm down a little bit and, sometimes go outside, take a week off and wait for a good opportunity and go back to their trading and investing journals.
Great.
Yeah, can I just jump on something you said there, Wendy? I think you've absolutely nailed it with the first thing you said. It's like people are just bored. Like when we get into sideways price action like this, is boredom and emotion is what hurts people the most. Like if we look through this cycle specifically, most of our like aggressive moves have just come within like a couple of days, even like the move up off the lows from like 15K to like 21, 22K. Then we chopped for ages. And then the next move from like 19K, I'm looking at the chart now when I'm talking about this, just to give you guys some reference, 19K to 27K, and then again, chop for ages, and then a little shoot up. And that's how it seems to have been this like cycle so far. So this drawn out period of what I think we've been in 109, 110 days so far in this range, it feels awful, and feel and emotion is literally the thing that's killing everybody. It's boring. And I think it's good advice or a good thing to say is like go out and touch some grass, like when it gets into periods like this, because you can chop yourself out of the market trying to get too clever, like trying to time the bottoms, apply too much leverage in these areas because of boredom, and you're trying to like look for that thrill. But I think we also forget in crypto, we do have to have like times like this in any market. Like you have to cool off for a bit when you've been on a run. And in crypto, because we do get that gain so quickly, it feels like every single day should be exciting. And it's, again, the word feel. It's nothing to do with the investment side of it. It's all about emotional control, as Wendy was saying. And I think that that's the most important thing here. Like, if you're not a technical analyst and you're not a trader, even traders within a range shouldn't really be doing too much to get yourself chopped out of trades. You've just got to be emotionally like solid, and it is hard, especially if you're early on in your cycles. And Raoul Pal has a great saying, is just like basically says like, don't fuck it up. And that's, so just keep yourself controlled. And that's what he's basically saying, is like, don't chase emotion, don't chase anything exciting. Just do what you know is going to do well, and like look through history and hold larger caps. And if you want to protect yourself, obviously, if you're looking for exponential growth, they're not really going to give you that, or like massive upside. But emotional control and just holding larger caps is going to be good for most people in the market. And I think I just wanted to touch on the emotional side of it.
I just want to quickly jump in. I'm Andy. So anyway, shout out to Wendy, Squid Growth family. Good to see you here. I felt that there's nothing really bearish about what's happening right now. I think because I deal a lot with different communities. I also deal with different institutional investors from my fund. I think the biggest issue right now in the market, why people think that is bearish, they find that it's boring and so forth, is because a lot of these so-called investors, they have ran out of money, because they are impatient. They want to see the 1,000 growing to 1 million. Maybe there's another bonk, another pair, whatever. I think the expectation is not there, but fundamentally, I think a lot of them has ran out of money. They put in the money thinking that it was bull, and then they just want to see maybe Bitcoin going to 80,000 or 100,000 because of different influencers telling them that, hey, it's going to be really, it's really going to be really bullish. But I think that correction right now means a lot to people who are patient, people who are careful investors. This is a really good time to just buy a little bit more. You're buying things at a discount. You're buying things at a price that is a little bit lower. It's time to just stack up. So my personal take is a lot of these retail guys have really ran out of money, ran out of patience, and thus that kind of sentiment. But if you look at this from a market perspective, by zooming out and looking at a slightly longer perspective, I don't see anything that is too bullish. Too bearish. So that's my personal take.
I mean, we're still at the very early stages of the bull market, in my opinion. I mean, as of right now, we're still operating on a 4-year cycle. I don't see any reason why we wouldn't be. And I don't know. I've always had this theory that eventually Bitcoin's price will stabilize once it becomes, once it hits a certain amount, just because I don't know. That's just my personal opinion. So I don't know. Maybe we're starting to see that happen. We're starting to see less volatility with Bitcoin. But either way, the fact that we're trading above $60,000, anybody that's been here since last cycle most likely was able to buy Bitcoin or acquire it under, at a lower price. So they should be up in their Bitcoin portfolios. So I don't know. But I do have to go. Thank you guys for having me. And I hope everyone has a wonderful day.
Bye.
Thanks, Wendy.
Take care, Wendy. Yeah, I'd like to jump in. Actually, I've I agree with quite a lot of what's been said, but I think there's also more to it. People are expecting with the Bitcoin ETF that all of a sudden it's going to be, straight to the moon, but it's not that case. These institutions they have much tighter risk management procedures, so you can expect them to take profits on a more regular basis. Which is why I think we're seeing a lot of capital outflow from the ETFs at the moment. I've always felt personally for the crypto market that the Ethereum ETFs were going to be more important anyway. And I think Andy took something really good as well. I think at the peak of the last bull market in 2021, there was around 30,000 registered cryptos. I saw something the other day. I think there's well over 1 million now. The vast majority of them are meme projects, and I think VCs generally are probably a lot more careful than they were back in 2021 when they all leaped into NFTs. So, capital has been distributed a lot more, which means that basically all the projects don't, it's, like I said, more distribution, but, maybe around the same level of capital altogether. Eventually, especially through the ETFs, capital will start flowing back in. And I think retail will come back in when, Bitcoin starts approaching all-time highs again. Becomes media coverage. And when the media coverage starts, that's when retail really starts to ape in.
Yeah, I have a question. So, I think the ETFs, they've been so anticipated in the market for so many years, and that narrative, and especially, kind of coinciding with this cycle's having. I just wonder what the next catalyst will be. I had some trader friends who essentially just said, ETFs are endgame, and that, obviously havings for Bitcoin will continue, but unless you're going to get sovereign wealth funds to really invest, there's not, a bigger, any kind of bigger pools that are going to have inflows. So I just wonder, maybe, this kind of stabilization we've seen, it's sideways movement for sure, but it's also the longest sustained, period at these levels. There hasn't been a peak and a drop. So I just wonder, if the markets are just waiting for something, if it's maybe something to do with the U.S. elections, or if it's, waiting for interest rates to drop. What do you guys think will be, kind of the catalyst to really break through again?
Well, I think for me, sorry if I'm jumping ahead of people here, I think the Ethereum lawsuit against the SEC in Texas is going to be massively important. I don't know how everyone clued is with new projects coming through, but most of them are whitelisting with excluding US citizens residents. So that's a lot of capital that's not coming into the market because of this regulatory situation in the state. So I think the Ethereum lawsuit in Texas will have a massive say in what happens, which hopefully will allow regulatory clarity in America, and then capital can inflow from American residents again. That's one area, and I think, for me, that's one of the big things, and the political situation in the States as well. Election years, always have a big impact in markets, not just in crypto, but all markets.
Well, as to the comment about who's the bigger buyer and what's the bigger event, as we now have Bitcoin ETFs, I think there will be lots of events, but I don't even think that these events are necessarily, these big catalysts are needed. I think we just need time. People are getting more and more used to Bitcoin, Ethereum, Web3, and I would look at it in a different lens, which is, what's the addressable market cap of the assets that Bitcoin, Ethereum, and everything else disrupt. And to me, we're at a 1.5 or total, market 2.5 trillion market cap, and we're disrupting. Let's see, what are we disrupting? We're disrupting gold. There's 12 or 13 trillion. We're disrupting, cash like M1, M2, all that at what, maybe 100 trillion globally, maybe more. We're disrupting bonds at what, 300, just national bonds at a few hundred trillion, and corporate bonds at, I don't know, probably another 100 trillion. We're disrupting real estate. These things are all stores of value. Real estate as well. Art, fine art also is used as a store of value and for tax purposes. And Bitcoin and Web3 are disrupting all of these markets. So we're looking at, collectively, probably $1 quadrillion of market that Bitcoin, to me, and Ethereum and many others are just massively better stores of value than, are predictable stores of value in terms of, their issuance and things. Price still very volatile, but that'll change over time. I think we've got hundreds of trillions to go. And by the way, that's a moving target also. That target of, let's say, $1 quadrillion, if you look at just US cash, the supply increased by 40% over the 2 years of COVID. And, what doubles every I don't know, 7 years or 10 years or something. So that move, that 500 trillion we're addressing, or quadrillion we're addressing, in 30 years will be 10 quadrillion. And so we are a small drop in the bucket, and I'm not so worried about these, short-term catalysts. I'm looking at the big picture.
Actually, that's interesting. Just thinking, because of the purchasing power now of the dollar, and inflation, in some ways we're actually, if we're pricing Bitcoin in the dollar, we also have to take into effect that 3 years ago, 4 years ago, the dollar was stronger, and so in some ways maybe the Bitcoin price itself is still inflated in that way, and really we're not even really at the all-time high as far as value goes. Like purchasing power, I mean?
Yeah, that's a fair point.
Yeah, and in terms of like dollar strength, though, currently the dollar is pretty strong. And like I was actually just looking again this morning and seeing yesterday that I'm in Dubai, so it's like evening time here. But I was looking this morning at the yen against the dollar, and that's reaching the highs where the Japanese government recently intervened. So I think that one of the things that Rock, how do you say your name, brother? Is it Rock? Is it?
Yep.
Yeah, one of the things that Rocky was just addressing was the moving target, and talking about the amount of, like, basically it's essentially debt, isn't it? The amount of debt that's out there that we then price everything in, and that is probably going to increase if they weaken the dollar, which I think at some point they're going to have to do. Otherwise, Japan are going to have to sell out of bonds, or they're going to have to create some more swap lines or liquidity somewhere, and that liquidity, inevitably some of it flows into crypto in some sense. And I also think we could talk about a million catalysts, but one that's been floated around recently that I think has had like not that much airplay, and I don't know if it was just a rumor or what, but with Bybit allowing Chinese retail investors to potentially purchase crypto again, I think that's not had much of a narrative, but I think we might see something there. And someone talked about sovereign wealth funds as well, and I also think that there will be more of those, like as the US have basically legitimized specifically Bitcoin and incoming Ethereum as well as a financial asset. You're just going to start to see, even just on an investment basis, portfolio allocation towards these instruments as potentially stores of wealth or growth or assets or tech assets, however they want to be like bracketed on people's. It's just got they've got potential to now be a legitimate part of people's portfolio, essentially, is what I'm saying. No matter how you want to bracket that, whether you do bracket it as a tech asset or a store of wealth, etc. And even if any institution or all institutions start to put it in as 1-3% of their portfolio, or sovereign wealth funds 1-2% of their portfolio, then that's a massive amount of inflow that we didn't have in previous cycles, just from the legitimacy of like an ETF.
And did you see, actually, to what you're saying, that is already happening to some extent? We saw, I believe it was one of Fidelity's, their all-in-one fund. Was it Fidelity? Does anyone remember? That has now, they have 3 tiers. I think it's like a conservative or a medium and a risk, a more aggressive. These all-in-one ETFs, they hold, I don't know, S&P 500 and maybe bonds and a bunch of other stuff. And now depending on how risky you want to be, it's something like 1, 2, or 3% in Bitcoin. And this is a Fidelity all-in-one, their, ETF that is very prominent and people, see.
I agree with you totally. And in fact, a lot of these big funds, big family offices, they are, because of the ETF, a lot of them are putting in really serious money. But coming back to what are the core catalysts that I think that it will really spur up things. I think first would be the US regulatory uncertainty towards crypto. If that can improve, I think we will see a lot more retail investors flowing into the market, driving projects, driving more liquidity in the market, driven by the US folks. And the other thing would be, what was being mentioned about Chinese investor. Maybe the Chinese investors not through Bybit. I'm not sure. I previously was with Bybit. I'm not sure what is their regulatory standpoint right now, but maybe not through Bybit, but maybe through Hong Kong, we might see that as a channel, for the Chinese money to be flow into the space. I think both US and China crypto play would be something really interesting to see the next jump in terms of liquidity or in terms of market cap. I think these are things that I'm looking at right now. Not sure if anybody agree on that.
Yeah, I have a question regarding since Bitcoin fell a bit, I feel like everything kind of slowed down. And is the meme coin party over? What's your take? What do you think? Will meme coins be back? When NFTs will be back? Will they be back at all?
I mean, for me, unfortunately, I think meme coins are going to be around for a little bit longer. I don't like their involvement in the space, to be honest. I'm really not keen on them. Anything without utility has no place. I know that for some people it's fun, but unfortunately, there's a lot of capital that has been, I suppose, wasted by pumping up into these meme projects. But yeah, they'll keep going for a while longer, unfortunately. But eventually, sense will come back into the fold. People start looking at more serious things, like real world assets. I think, a couple of others mentioned earlier, you're looking at fractionalized real estate. NFTs will have a major part to play in real world asset space. And, there's so much opportunity right now. I'm in touch with a lot of projects who are yet to launch. And, there's going to be an explosion of activity and capital inflow, with these opportunities coming through. And I just hope that people have enough sense to, don't ape into the memes, hold your capital, good opportunities are coming and go into good projects. Fundamental strength is what you should be looking for if you're looking for an investment.
But do you think PFP collections, sorry, I'll just ask this question and I'll let everyone else speak. So do you, like, CryptoPunks are on sale, Bored Apes are on sale. Do you think these collections are going to make a comeback ever?
Me, no. I think with crypto, it's what's new. But yeah, I think of, I'm not going to say unfortunately because I never liked them in the first place, and I never dipped my toes in there. Yeah, for me, they're over. It'll be whatever comes next.
It's so over. Yeah.
I think that, well, okay, there's a few things there. Look, I'm generally with you, Chris, that I'm not the biggest fan of the way memes have evolved and how people are so focused on them. And I'm a core contributor of Doge Chain, the chain of memes and dreams, and I still am a quite conservative investor. I don't hold a lot of memes. I hold Doge and a couple others, but I think I'm gonna fight for the side of memes just for the fun of playing devil's advocate with you here, even though a lot of the time I'm on the other side. So one, memes are gambling, and people love gambling. So to say that they're not going to last, or that they may die, or NFTs as well, I think. Look, gambling is pretty big in the world. You look around at the world, and casinos are pretty big in all countries that allow them. So I think people are going to want to continue to gamble. They're going to want to try to find the quick money. As for NFTs, and are they coming back? I think NFTs are a very incredible technology overall for, like, as Chris mentioned, RWAs and all kinds of other things, games. And so generally NFTs, I think, will always have an incredibly strong place, and will only get stronger as the world tokenizes everything, as like Larry Fink from BlackRock would say. But NFTs in the form they were before, which was kind of more on the gambling side, I think will maybe take a hit. And the reason I think that actually is because of memes. I think memes are a more liquid and easily tradable version of gambling NFTs that also have community. They're not as unique, and you don't have single pieces that is like represents you, but you can be part of a community. You can kind of gamble. You can have big X's, and they're very liquid, and you can play a lot more kind of gambling games with them.
I just want to chip in as well. I think NFT will definitely come back. Maybe at the later stage of this bull cycle. They're not going to die. I had a conversation with the OKX, the CMO, 2 days ago. Both of us believe that, NFT commercialization is going to take place in a much bigger scale. It can happen in title deeds, it can happen in medical records and so forth. But, the point about, PFP, I personally do not think that it will grow as big as the last time, because ultimately, we do not really see the value behind all these PFPs. So NFT side, I think, is going to grow. Then the question was, is meme going to stay, or how is it going to, how is it going to evolve? I think meme coins are definitely here to stay. You like it or not, because it's fundamentally part of the whole Web3 DNA. Because they run the communities. They have the people. They have the hype. They have the degens supporting them. So I think they are definitely here to stay. Whether there are any forms of utility or not, I don't think is really that important, to be very honest, because a lot of the projects, they have good utility, but they do not have community, right? If you have a good meme with community, you can definitely do a lot more with the utility later on. So it's all about it's all about a cycle. So personally, I'm very much into the meme space. Of course, I'm not into the pump and dumps, but I believe that with good communities, anything can happen. And I also see a very fair trend right now. At least for my own circle of friends, right now we are looking at coins that are not supported by any form of VCs or any form of really serious people running it, or controlled by all these institutions. We felt that during this bull run, we should try to see if there are any good coins that can really emerge, from all these few hundreds of thousands of new coins that are coming out. We really want to see some that are really decentralized, and some that can really drive the community with a certain nice flair. So yeah, that's what I'm thinking. I'm 100% against scams. So let's do more together.
Yeah, Andy, Rob, sorry, Rock, I actually agree with both of you. I mean, although I'm vehemently against memes, to be honest, but there are outliers, of course, as there always is, and I think Doge, Floki, SHIB have proven that you can start with a meme and then you can build the utility in later. And Floki and SHIB especially, I'm really impressed with the ecosystem in DeFi that they've built. TokenFi, for example, is an exceptional project. And I'm really looking forward to what they can start delivering, later this year and next year. And I'm curious as well with the likes of some of these bigger ones that are out at the moment that pumped, in the last 12 months or so, like Peep, Bonk, Whiff, whether they're going to follow suit and add utility later. But as you said, Andy, 99.99% of them are absolute dog. So yeah, hopefully that some of these really popular ones will develop that utility later on.
Yeah, you look at SHIB and Doge, they have chains now, right? Like EVM blockchains where you can build things. So Doge has Doge chain as a L2. You have Doginals. Now there's Dunes, which are the Doge version of Ruins. And what's I think kind of interesting about that is that with Bitcoin, the fees to mint and to trade are just way too high for most people. And so a lot of that traffic has moved to Doge and Doginals. That's pretty interesting. With SHIB, you have, I believe they have two blockchains now. They have Shibarium and I think it is Ryoshi chain. And so, yeah, these bigger memes that are here to stay and not just pump and dumps certainly start to have some utility. ApeCoin was actually, they reached out to us to ask if we could build the same thing as Dogechain for ApeCoin, and at the time we were just too busy focusing on building Dogechain. But yeah, so I think a lot of these memes end up, like you said, Floki actually also, they have a bunch of cool projects and utility in their ecosystem. Yeah.
By the way, you brought up runes. What's your take on runes?
I think that I think there is a whole class of people in Bitcoin like myself, actually, that have been waiting a long time to be able to do fun stuff and build on Bitcoin. So I am CEO of Lunar Digital Assets. We're an incubation firm. We've built a lot of big projects in the space. We never built anything on Bitcoin. You know, I personally would commit my own time. I was one of the first 500 Lightning Network nodes. I was there fighting in the block size wars from 2016 and 17, 18. But what could I do with my company that needs to generate a profit with Bitcoin? You know, I can't, there was never anything to build, or if there was, Bitcoiners would, you know, if you tried, Bitcoiners would slap your hand and say, no, don't do that. Tokens and anything that's generally kind of for profit other than just holding Bitcoin is a scam. And so now there's been this big cultural shift. It started with Monero in like 13 and 14. You know, some Bitcoiners said Monero's okay. Then in 2020-ish, you know, people started, some Bitcoiners started, like Peter McCormick and others on the What Bitcoin Did show, and some others said, oh, maybe stable coins are kind of okay for third world countries because they can't handle the volatility of Bitcoin as a day-to-day currency. And then came ordinals and runes, and that just flipped everything. It totally divided the Bitcoin community into, hey, we should build shit on Bitcoin, and hey, no, Bitcoin should be like this holy money. And so now you have ordinals, runes, Bitcoin L2s, and just this plethora, massive innovation and investment happening. I mean, there's billions being invested into the Bitcoin space, and so I think runes, ordinals, cool, fun, interesting. It's cool to see people hacking together these like tricks of how to build stuff that should require a smart contract, but you know, Bitcoin doesn't have smart contracts, or it has very limited smart contracts. And so I think runes and ordinals are here to stay. I think what'll happen though is that they'll move to the L2s for functional layers, just like everything else will. Like with Ethereum, all the functional like stuff is going to happen on the L2s, like Polygon and Optimism and Arbitrum. On Bitcoin, it'll all happen on layer 2s like Lightning, ZKBTC, company that LDA is incubating, and Stacks, Merlin, all of these. I think what will happen is people will mint ordinals and runes on Bitcoin, but they'll quickly bridge them over to their favorite L2 to actually trade and have better liquidity.
Brooke, you mentioned the block size wars. You know, back, this is like, I don't know, for us dinosaurs in the industry, maybe we remember. But I wonder which side you were on, and you know, looking at the you know, kind of the building on Bitcoin now, whether you think it was the right choice to keep the limited size, or you know, would it actually be easier to build if we had larger blocks?
Yeah, sorry, just I want to quickly introduce Adrian. He just joined. Hey, Adrian, you want to say a few words? We're talking about current market trends, runes, meme coins, what's happening.
Hey, yeah, thank you so much for bringing me up here. You know, great lineup. So I'll probably be the dumbest in the room, just like it always happens. Good to see you, Chris, my man. Chris already represents the burbness and all the excellence he always brings. So there are a lot of good people in the room. So yeah, maybe I'll be able to chip in with one or two sentences. Otherwise, I'll probably shut up most of the time. Listen to the smarter people. Yeah.
Good to see you. Also a good speaker, Adrian. Yeah, good to see you. To answer Mugen's question, yeah, I was on the right side, the winning side, the what everybody and myself at the time called the small blockers, but what I would actually now looking back call the ossifiers, that's how I would classify myself. So it's not necessarily as much for me about the small block size as it is ossifying the protocol, which is like, you could picture like a fossil. If you want your core money, and I think this should go for all chains, should strive for this at some point, but the L1 should stop changing, because if it keeps changing, and if there is some cabal or charismatic leader or council, wise council, or whoever it is, consensus, or whoever, Blockstream, that can control or change the protocol on the L1, then what will happen in 10, 50, 100, 1,000 years? They can change the protocol in bad ways. Maybe we like Vitalik now, but what happens when Vitalik is dead and BlackRock owns a huge part of the supply of Ethereum and they change it for their own good, right? Through the ETF and proof of stake. Basically, I think that Bitcoin especially, I'm much more open to Ethereum's changes, but I still think there's risks that come with that for someone trying to take control of the protocol. But I think Bitcoin should almost completely stop changing at some point. And I don't know that we're completely there yet. I think there are maybe still some key changes that need to be made. And when you have things come like quantum computing, we'll have to mobilize and convince, in Bitcoin, you need 90% plus of the community to agree to have even any kind of soft fork have any success. So I think that's a good thing. I think L1s should ossify, should stop changing, and all the development should happen on side chains, L2s and above. And we shouldn't be tinkering. We're not, we shouldn't be having like something like the Fed oversee Bitcoin or Ethereum. And that's what you kind of have with Ethereum, is like a sort of decentralized or like benevolent, like good developers that kind of are like Ethereum's the Fed and suggest changes to the monetary policy. And I'm not a big fan of that, at least for having a true global currency.
Yeah, no, I think I definitely agree. But it's kind of interesting. You brought up the Fed, and like in some ways, at least Bitcoin's price and like its current place in the market as a very much like risk-on asset. It is in a lot of ways dependent on the Fed and on U.S. and kind of like macroeconomic changes. So maybe now Adrian's here, and we have probably, I don't know, 15, 20 more minutes we can discuss, but I'm curious just kind of to look back at the macro factors and then kind of like also these, kind of like micro factors. And maybe we can even, if, we have traders among us, what we can actually look for on the charts, what kind of indicators we should be looking at for, kind of like for Bitcoin, for Ethereum, for any kind of like blue chips that trade in, kind of more patterned ways, not like Memecoin, Burj Khalifa stuff.
Can I just quickly, sorry, Adrian, just before you move on to that, I'll let you go in 1 second, then get to say anything about memes, because I just wanted to like say one thing specifically, because I've been thinking about it a lot recently, like where our future's going. I wrote about like 5 key topics. It's like AI, Web3, content creation, gambling, and esports. And I think that memes almost attack 3 of them, and that would be like content creation, gambling, and Web3. So whether they've got a specific place, like I don't know, like I've not really decided for myself. Like obviously the market makes its own decision, and you can see there's a massive market cap in meme coins in general, and whether that continues, like we obviously don't know towards the future. But one thing that is really interesting to me right now is the fact that you can get like a community token, and it's almost like a fair price on attention. I don't know how that develops in the future. But one thing I said about celebrity coins, I think most of them are like complete rip-offs, people just looking to make pump and dumps. But it just takes one person to do something experimental with that and change that dynamic from being like a meme coin in like inverted commas to being something like real and something that might affect our future. And it also shows that there is that people can raise capital around a community pretty quickly, and that where attention goes, money flows. So it shows all of those things. But one other development that we've seen off the back of that, and I know it was around before, like political meme coins, but also things that happen in the news. It might be a new way for people like to display their opinion on different things, like whether they like it or don't like it. And for example, like when Trump got arrested, like his meme coin dropped, but then when he lost his case or whatever, his meme coin dropped, but then very quickly then pumped to new all-time highs. And it kind of shows the reflection in real time and in terms of like actual value in what the market is thinking. And that's just one thing that I wanted to touch on. It's like we kind of missed community tokens last cycle. We didn't quite get them, and I thought we were going to around maybe like sports teams. We saw like the rise of some different tokens, but maybe this is coming towards like the the creator and the individual and that sort of community base, because it's clear people will need community, and that's what happened with NFTs. People wanted a community there, in my opinion. It's happening again with memes, and the ones that stay around, there's a strong community. We use that same word, and like memes themselves, like I don't want to get into it because I don't know which side I sit. I don't make any money in memes, so I always get wrecked. So I definitely don't want to touch on that and tell people how to trade them. But I do think there is something there that we, as humans, like are drawn to them and have some sort of, I don't know, feeling, or they were going to do something going forwards. Potentially, that's just my thought on that.
You're not alone in getting wrecked, sorry.
I so agree with you on the like memes or NFTs as these like community tokens for big brands. I'm not sure on this. I'll give it this a 60-70% probability, but I'd say that I think it's very possible that at some point, like the internet, all like brands will have a like either a meme token or an NFT or just a team token. So like if you're the Lakers or the Dodgers or insert your favorite team, would you not be more inclined to go to a Lakers game if you knew that, oh, I get 10% off because I hold so much of their token, or oh, they're giving away extra tokens today at the game if you go, or they're giving away a Kobe, an RIP Kobe memorabilia NFT if you go to the game today. And or what else can you do with these? As like bands, if you're a band and you have some NFT or tokens, and there's so many things you could do. You can have an NFT for every concert you go to, and I don't even remember half the concerts I go to. Cindy has to tell me, oh, I might say, oh, I want to see that band, and Cindy says, yeah, we did see them like 6 or 7 years ago, and I don't even remember. So if there were NFTs representing that, if there were, you could have it where you have NFTs. There's people actually in Web3 doing this, but not as much traditional, bigger bands. But you could have an NFT that gets you free access to like a little Discord group with that artist once a month, where you get to talk to Taylor Swift directly or something. There's so many things you could do with that. The limitation, I mean, are really infinite there.
Yeah, and that was kind of my point. Like with what I thought even when celebrity tokens first came out, it's like, look, I'm not advocating any of them. I started to tweet about them and got some hate, and I wasn't trying to say that I was like shilling any. People were like, oh, you shilling this? I was like, I'm not shilling it. I'm just saying that if one celebrity does something interesting with this, even if 100 do something bad, like yes, people are going to get wrecked. They always do in crypto. Even if one celebrity does something interesting, like makes it, I don't know, a subscription based, like you were saying, whatever they might do that might be creative, whether it's merch or whatever, that's as far as I can think, because I'm not in that position. But if they did something creative that took it from being just this pump and dump to actually being something, then that's how like new trends in general start. And that's how I think this will like go from being just a community or an online community to being something that can be a lot more than that, like in the future. And obviously that's how things expand into things with more use case, etc., going forwards.
But to be honest, there are a lot of these like fan-based tokens that are run by Chiles. They convert football clubs into fan tokens and so forth. I think that scenario is very close to what we are trying to describe right now. And to be also very candid, like last year when I was the partnership chief at Bybit, I take care of all their F1 related promotions with Oracle Red Bull Racing. So Oracle Red Bull Racing are also trying to do more with their NFTs. So last year there's a pass that they have came out with. It's called a Velocity Pass. I know they have it this year, but I'm not involved. But I think the concept is the same. They try to use that Velocity NFT pass as a form of a ticket, as a form of a entry point for their fans to be engaged, to know more about Web3, and additionally, of course, give them some perks if they hold on to that pass and so forth. I felt that part of the things are being done by quite a number of big brands. It just didn't really follow through the whole process or maybe they didn't really advertise this as much as they would like to. I really hope that maybe this particular bull run, we can see big brands or big things happening in that space. Definitely, I think big brands running a meme fan token, that would be something really fun. That's real utility in my humble opinion.
Yes,
And you're right that
yes, sorry. I just want to quickly say that I feel like the only good example of a project, NFT or meme coins, bringing utility is probably Pudgy Penguins with their revenue share from the plushes they're selling. So, why are you crying, Andy?
No comments. No comments.
No, tell me.
But I think it also just might be like, kind of waiting for those use cases to come from like really, IP that really makes sense. Like I've always thought the NFTs, needed like a Pokemon, kind of like that summer when Pokemon Go just really took off. It's something where it incorporates NFTs or like a meme coin. But I also fear that these brands are just too cautious and they don't want their brands to necessarily be attached with like, the monetary, like the risk of like, trading and kind of the gambling side. So I don't know, we'll kind of see what happens, but I think in general, it's strange that meme coins took off, I'd say like, earlier than usual this round. I don't know. What do you guys think? Usually, I mean, the traditional kind of narrative would go like, Bitcoin, then blue chips, then, people cycle their profits into whatever they want, whether it's NFTs or meme coins. But yeah, I don't know. This cycle just seems to be a bit different.
I'll go back to what was being said a second ago, which is the why are NFTs for teams and things not being picked up as much. I think there's 3 reasons. One is that there are no like global kind of easily used wallets that everybody has. I think what you really need is you need to have your Google, Web3 wallet. You need to have your Microsoft or your iPhone or your Android like built-in wallets. Like imagine if you had a wallet built into your Google account. Google accounts are relatively secure. Mine's never been hacked. Knock on wood.
Sorry, there is a wallet built into your Telegram.
And also with account abstraction, you essentially can do that, right? I mean, you can log in with your email.
Yeah, so that's
we can use the ZK that Sui has developed too. They can use an email to log in.
Yeah, I think it needs to be much more mainstream though. Like, when I double click the side of my iPhone, it brings up all my wallets there, right? I need my wallet built into that, or I don't, right? But the typical person may not want to, like, if you go to a sports game and they tell you, hey, you want some points, you got to download this wallet, and then you got to figure out, get your seed for it, and people are like, what the hell are you talking about?
Too much friction.
Yeah, too much friction. So you need it to be much more mainstream, somehow obfuscating private keys and backups and stuff, which I don't know that you would really totally need with like a small balance Google Wallet or something that you're just using for sports memorabilia stuff. But anyways, that's one thing. I think just people understanding crypto, retail understanding crypto is another thing. And then 3 is regulation. Right now, I mean, look at the the lazy or stoner cats or whatever, Mila Kuna and Ashton Kutcher, and then made a collection, and they got sued by the SEC, right? And they settled with the SEC, I believe. So yeah, a lot of people are probably very scared. I mean, celebrities are definitely scared. Any celebrity that goes to their lawyer and says, "Hey, I want to promote some coin, or I want to make a meme coin," their lawyers are probably telling them, hey, look, this happened, and this happened. It's dangerous. You shouldn't do this. You can get in a lot of trouble. It's just not worth it. And so once we have some more positive regulations, which I'm surprised no one today has mentioned that, now this is a huge political topic on almost if you watch any podcast about politics, you watch, like yesterday, Trump was on the All In podcast, one of my favorite podcasts. And, they talked about Trump being pro-crypto now. And so, yeah, it is a huge discussion in regulation. I think that either Biden, if he stays in office, would either try to continue to fight crypto harder because Trump says he likes it now, or he realizes, okay, there's a lot of voters out there that like this crypto stuff. Maybe we should not be attacking it so hard. But it is a huge issue right now. And I think this is very positive that, you know, during the last election, I made a tweet, or not last, earlier in the election, when there were a lot more candidates, I made a tweet that there were 6 candidates that were pro either Bitcoin or crypto. And now Trump is on that train as well. And I think we're going to continue to see that as people realize this isn't going away, and there's a shitload of voters that will not vote for you if you are anti-crypto.
Yeah, it's kind of maybe a little unnerving though that it has become politicized. You know, just because. I'm definitely for pro crypto regulations and whatnot, but you know, I think back at the ethos, like it shouldn't be so dependent on you know, these old institutions. But we'll see how it goes for sure.
Well, we didn't have political support for 15 years, and it kept growing massively. It was the fastest growing asset in the world. So I would say we don't need the regulators, but it certainly doesn't hurt to have them.
I think what's going to happen in the European Union is going to be telling for what could happen in the States. You know, obviously MiCA's coming into the first stage of MiCA's coming into effect in what, 10, 11 days time with a stable coin. It's going to be interesting what happens with Tether as well, because it's an unregulated stable coin according to the MiCA classification. So whether the US, you know, eventually when the SEC get their sense together and start, you know, all American regulators could start to, you know, come together and figure out how to treat digital assets, you know, whether they'll use MiCA as a framework to build upon. So, you know, if capital growth in Europe grows significantly, then I think the US may look upon it more favourable, because they'll realise actually we're being left behind here. So I think regulation has a very important place for when it comes to global adoption of this technology.
Yeah, I think it's it may be time for us to wrap up, but before we do that, I have probably one last question for everyone. I see we're all pretty bullish here. When do you think we will see the peak bull run?
This is Adrian. Adrian, you're up, mate.
The mic is yours.
You're calling me out of here. Got you. So long story short, you know, I always like to rely on the facts, right? And predictions predictions can only be so accurate, although they are far more accurate when they are based on facts and numbers, raw data and evidence, rather than pure guesses and just, you know, dice rolls and so on and so forth. So ultimately, you know, the data suggests and recommends, at least by, I don't know, take the more fundamental valuation methods right now for Bitcoin, like the, you know, MVRV, basically like the market value versus the realized cap, or the realized cap versus, you know, the market cap, whatever ratio we put in. Historically, you know, we tend to top out, and whenever, you know, it reaches 7 or more, you know, for the market cap versus realized cap. Realized cap is how many, like the summary value of the transactions on the on-chain taken by day, for instance, and the market cap throughout the days is telling you how much bloat there is over the actual, you know, ledger summary. So whenever the ratio exceeds 7, there's, you know, the market is 7-fold pumped and bloated over the realized cap, basically. This has historically been a very, very dramatic information that the picking was a process. Right now, last time I checked, it was two, hold on, let me check right now. I'm gonna check it right now in a moment. It must have been 2.3, 2.2. I'm gonna know in a second. Now in the Z-score, right? So it's expressed in the amount of standard deviations. Right now, my bad, it's actually the latest update is from 2 days ago. It's 2.03. So by 2.03, if we take 7 divided by 2.03, kind of like push it by 64, that places us were around $220,000, you know, for the peak. In case we wanted to pick out like out of nowhere and go from the current prices, from the current number of Bitcoins in the circulation and so on. So, you know, we are far from anything that may look like peak. That's historically based on historical data, that's a fact number one. Fact number two is that we always breached, significant rallies and brought significant rallies after the halvings. We just had a 4 halving, on 20th of April, 420, Jesus, what I mean. So we had a 4th halving on the 420. And historically, we brought 9,000% rally on the first halving, 3,000% on the second halving, 700% on the third halving. So there is this diminishing tendency, although 700% on a 1.3 trillion cap asset is somewhat significant. So maybe I wouldn't expect it to go as hard and as much, right? So 220K by the current valuation of the MVRV, like simple maths. Probably the best idea is to kind of like have a couple of those valuations, like the net realized NUPL, like the net unrealized profit and loss. And basically, the MVRV, the technical targets, the round numbers, we all tend to glue together and stick to the round numbers because they are easy to remember. We have this magical thinking towards them. So we kind of like idealize them for whatever reasons. And this is what also attracts and builds, this is what builds the clusters of support and resistance, because people glue and put their asks and bids in that region. So there's a lot of reasons, like I said, to seeing the numbers that we are far from the peak. We are entering the slowest period of the year, which historically is a very weak period. July tends to be not the worst month. However, it's definitely far from the best ones. And July followed by minus 0.4% negative August, or flat August, with minus 6.5% average gain in September, which is the only losing month. That typically leads to fairly stable, flat, or negative Q3, while on the other extreme, Q4 on average over the last 14 years tends to return 50%. That's 50, with October returning 22, November, giving you 40% on top. So a very significant tendency on the uplifting curve, for Bitcoin and for other altcoins to grow as well, led behind Bitcoin. Very significant push, expecting very significant push in Q4 and probably Q1 last year. So I've been wrong 50 times on the wrong calls. I called Litecoin to $2,000. That was complete bullshit, obviously, in hindsight. So I made a lot of mistakes, which is why I stick stronger to data and to numbers these days rather than kind of like pure guesses. Because when the overconfidence takes over, that's typically skewed towards too optimistic outlooks. So just to kind of like cap it from my end, Q4, Q1 is where I'm expecting the biggest congestion of the action. Like typically market returns 90% of the profit you get in the last 10% of the cycle. It's a little bit like a skewed, more bullish version of a Pareto rule. Even if it's 80-20, then still, we haven't seen the best. We've reached new all-time highs towards 74K. The valuation models are fairly low and definitely nowhere near towards anything that may look like a peak. Halving is on our side. The institutions are on our side. The ETFs brought over 300 billion in the cumulative volume on the spot ETFs. 90% of it is the spot, 10% up approximately on average is futures. So the stability, the spot, not the speculation, is exactly what is the signal from the market. So we're slowly getting there. Even the YouTube views, there was some record. The YouTube views were down 80% basically from what it was 21. We are fairly not saturated and far from any saturation level of what it was in 21. And that also comes with the fact of the high interest rates, right? Because the businesses are holding back, the people are holding back. They're still conservative on their domestic spends. And all that leads to a little bit of a patience game. So Q3 typically slower. I wouldn't go crazy about Q3, Q4, Q1. Next year is when I'm expecting the most action. And that's where I'm expecting the most money to be made. And that puts me into basically the strategy of taking the second half of 2025 to go out of the market. So the second half of the year, next year, I'm scaling out.
Hey, I got to run, guys. Great analysis there, Adrian. To the Polygon Twitter Spaces, if anyone wants to head over there once this one ends. See you guys there. But yeah, great conversation, and thanks for having me. everyone, Crypto Bay, Mugen, good to see you, and everyone else. See you guys.
Thank you, Rock.
Good day.
Thank you, Rock.
Thanks for
I'm bullish, by the way, though. In a quick phrase, I'm bullish, and I never leverage, but I'm thinking about like small leverage use just by borrowing stable coins on like Aave to buy Bitcoin or ETH. I just converted a lot of stables already to Bitcoin and ETH over the last like 5 or 6 days. So I'm bullish, not necessarily in the short term, but I don't care about the short term. I'm looking, at months and longer. Okay, see you guys. Cheers.
Cheers.
Chirac.
I also wanted to give a real quick shout out to Andy as well, to Andy Lian, because the hard work you brought into Bybit, and with the Formula One and so on, thanks to you, I was able to wear a T-shirt with the Pala T-shirt with Formula One racing, the Bybit, the Red Bull stuff. So otherwise, I would be dressless. So I appreciate you, my man. Keep up hard work. Great stuff.
Cool, man. Cool.
Yeah, thank you, Adrian. Thanks for it was amazing. I think probably it was the most useful piece of information I've heard on Twitter Spaces ever.
Yeah, and just to top you up, mate, with one last little thing that you've just highlighted as well, Crypto Bay, is like on Twitter and in Spaces and everything at the minute, I think everyone's a little bit too bearish because they're scared to project larger upside targets, because in the last cycle, people got a bit ahead of themselves, projected large upside targets, and then got burnt, and you look stupid if you go for something that's a lot further out than other people. So people have been like looking for tops around 120, 130k Bitcoin. I'm more in line with Adrian as well, looking towards 220, and that's just based on timings and also where we are in liquidity cycles. And he didn't talk about because it was mainly on chain, but that's starting to uptick now. So I just wanted to add that on. It's just the sentiment around crypto Twitter specifically feels like people don't think it's going to go as high as it possibly could. But I think that's just because they're scared to put projections out, because it's easier to look stupid to the downside than it is to the up.
Yeah, one thing that I know we have to run, so we're going to be short. One thing that I can kindly recommend for everybody to consider is that we don't have to know the peak. We don't have to estimate stuff. We don't have to guess the future, because it's impossible. As long as we keep, take a look at the data, we see that the trends are unveiling. The trends are in a positive fashion. Trends are uplifting. They are working in our odds, right? We are on the side, same side. So we should, as a matter of fact, most of the time in the long term, be trend followers. We should follow those trends, which means that they have tendency to continue, and we shouldn't too early capitalize on the profits right there. Instead, what we can do is we can trail our stops higher, right? We can just limit and trim our positions, ultimately if we go higher. However, no one knows where the peak comes. No one knows when it happens. Maybe it's going to peak next month. God knows, right? What we can do is try to follow the trend. And as we follow the trend, and that the trend is a friend, ultimately we are not exposing ourselves to risk of guessing the uncertain future. We're actually focusing on relying on the facts. And if the stop losses are breached, whatever the stop loss is, it can be the hard stop loss, the amount of money that you lose from the peak, the ATR, the volatility of the market, standard deviation, the volumes, whatever that is. You can use those numbers and basically cut out your positions when the time comes, and the market is going to tell you when the time comes. So we shouldn't guess. Let the market tell you the future.
Yeah, that's a great way to kind of wrap it all up. We definitely need you back, Adrian, to discuss more about, kind of these technical analysis questions. I'm really interested in the indicators that you're talking about, but we'll save that for another time. But yeah, just wanted to thank everyone who's listening in, and thank you to all of our speakers. Thank you, Crypto Bay, Sasha, for co-hosting. And yeah, we'll see you guys soon.
Yeah, thank you for the invite. Appreciate it.
Yeah, thanks for having us. Nice to speak to you all.
Thank you. Shout out to everybody. God bless. Thanks for